Welcome students. In the last few classes, we have discussed about chapter number 4, where we discussed that cash book has two columns, cash column and bank column, and there is no need to make a cash and bank account as the information is already available. Now we are going to start a very important chapter, chapter number 5, that is bank reconciliation statement. Our discussion is going to be divided into three parts. First, meaning and need of bank reconciliation. Second, finding the causes of difference as to why there is a difference between both books. And the most important part, of course, is to understand as to how to make this reconciliation statement. Now, let us proceed with the first part, that is meaning and need. Once we make a cash book with cash column and bank column and balance these accounts, it is usual to check these with the bank statement or passbook made available by the bank. Now, what is bank statement? Bank statement or passbook is a copy of bank account as shown in the bank records to help the customers to see, update or cross check their transactions with the bank. Now, generally the balance of cash book and passbook must tally, but mostly it does not because of many reasons which we are going to discuss in section 2. But here arises a very important point, that is, what is the need and what is the meaning of this bank reconciliation statement. Now, first of all, what is the need of making this statement? Need is to ascertain the causes and present in a statement form called bank reconciliation statement. So, bank reconciliation statement is a statement prepared to know the causes of difference and present them in a statement form so as to reconcile both balances, cash book, bank column and passbook. The pro forma of bank reconciliation statement will be, we can start either with balance as per cash book or passbook and maybe overdraft as per cash book or overdraft as per passbook, and then do the adjustments to arrive at the other balance. Now, let us start with point number 2. What are the causes of difference? These are divided into three categories. First, timing difference. I will explain this. Second, errors of bank which are committed by the bank. And the third part, errors of the firm, that is, errors committed by the accountant or the staff of the organization. Let us start with the first point. What is timing difference? It means the difference arising due to the time gap between recording in one book versus the other book. Like suppose I record one transaction at a particular point in cash book and it comes in passbook after some time. So, there is a difference of timing. The main causes of this timing difference are: first point, check issued but not presented. Firm issue the check, but it is not presented by the creditor. But when we issue the check, we credit the cash book immediately, but bank will debit only when the creditor deposit it in his bank and it comes to my bank for clearance. So, there is a delay. So, this is timing difference. Second point, check deposited in the bank, but still not collected because it takes time in clearance of check. We debit bank in our cash book as soon as the check is deposited, but the bank will credit only when it is collected by the bank. So, there is a delay and this is timing difference. Similarly, let us see the third point. Suppose there is a direct debit made by the bank on behalf of customers, sometime on account of various charges like interest on overdraft, collection charges when bill is collected, etc. Now, this will reduce the bank balance in passbook, but in cash book we reduce only when we come to know that it is shown in the passbook and then we correct our cash book. Till then the balance will differ. So, this is also timing difference. Let us come to point number 4, amount directly deposited in the bank, that is credited by the bank, like deposit by the customer directly, customer of the firm, interest credited by the bank on a particular date. Now, these things will increase the bank balance in the passbook, but in cash book it will be increased only when it comes to the knowledge of the accountant. Till then difference is there. So, this is also timing difference. Similarly, next point number 5 is interest or dividend collected by the bank and credited in the passbook, thereby increasing the passbook balance, but again the cash book will not increase till the accountant receive the information from the bank. Till then cash book and passbook will definitely differ. And another point number 6, direct payments made by bank on behalf of the customers. Suppose the customer says please pay insurance premium, rent, tax, etc. on a particular date and the bank makes the payment. What happens? This will reduce the bank balance because it will be debited in bank, but in cash book we will record only when it comes to the knowledge of accountant that this entry has been done in the passbook. Till then again there will be a difference. Coming to the next point, check deposited dishonored. Now, when the check is dishonored, bank will debit in the passbook, but in cash book only when it comes to the knowledge of accountant or the firm. So, we see that due to timing difference, that is in one book at a different time and in the second book at another time, the differences will be there. Now, let us discuss point number 2, that is the errors by bank. Sometime in the bank also there is a totaling error, wrong check deposit, they have deposited another person check in my account, or they have withdrawn from my bank account some other persons, like these things. Suppose there are two names of same type. So, it can be a case deposit or withdrawal in the same account, but of the different customer. The last point number 3 is errors can be committed by the customers also, like check of bank account number 2 recorded in bank account number 1. Suppose I have two bank accounts in the same bank and I deposit number 2 account check in number 1 account in my cash book, but when it goes to the bank it will go in the right account. So, till then difference will be there. Or sometime I can write a wrong amount of check in my cash book, but in passbook it will be a correct amount. So, all these errors will result in difference among cash book and passbook, which has to be reconciled by the customer or the firm. Now, let us see what we have understood till now by way of few multiple choice questions. First question is, who prepares a bank reconciliation statement? Options are creditor, bank, debtor or account holder. No, it is not bank, it is account holder, because you want to tally your accounts. So, you have to make. Bank is not your servant. Second question is, passbook is a copy of what? A, customer account in the bank, B, bank column of the cash book, or C, cash column of the cash book. I hope you know that C is not there. So, whether it is A or B, I repeat again, A, customer account in the bank or bank column of cash book? Yes, the answer is A part, customer account in the bank, right. Let us see the next one. Bank reconciliation is prepared, A, to reconcile the cash balance with the cash book. Second, to reconcile the difference of bank balance of cash book with the passbook. C option is both A and B, and D is none of these. Yes, the right option is to reconcile the difference of bank balance of cash book with the passbook. Let us do some fill in the blanks also to check or upgrade our knowledge. First is passbook is a copy of blank account as in the bank ledger. Fill in the blank. So, passbook is a copy of which account? Yes, customer account. Next, normally if the cash book is debit, passbook will be, oh yes, credit, because debit here, credit there. Next one, money withdrawn from bank will be dash in the bank. What will we write in the dash? When you withdraw money, passbook will be debited. Yes. Next one, favorable balance in cash book means which balance in passbook? Yes, credit balance, because debit in cash book is favorable. So, credit in passbook is favorable because both are opposite. Next, credit in cash book is equal to what is in passbook? Yes, debit. I already told you, if something is credit in cash book, it is debit in passbook. Something is debit in cash book, then it is credit in passbook. So, friends, in today's session, we have understood the meaning and need of bank reconciliation statement, and also why the differences are there, mainly due to timing issues, errors by bank or customers, and all these in detail. In our next session, we are going to tell you about how to prepare this bank reconciliation, what is the format of that, and what are the various cases of preparing it, like starting with balance of cash book or balance of passbook or maybe overdraft. All these things will be discussed in detail in the next session. Till then, happy learning. Thank you.